What's up guys, Kevin Cage here with another crypto update. Today is our monthly iTrustCapital video, so I'm going to go through a bunch of information in a relatively short video. And in the beginning here, we're going to go through some info looking at the crypto market cycles that I hope you find as interesting as I do with where we're at today. We also know that iTrustCapital will be adding some new products later this year that go beyond just crypto assets that we reviewed in last month's video, and of course they'll be adding many more crypto options in the future. I did learn some exciting news for crypto specifically, but I can't speak on it until it's finalized. Alright, first up here, for everybody in crypto today, it's incredibly important to understand that this market moves in cycles. This is cyclical, so we're going to dive into that, and then we're going to go through several types of retirement accounts that iTrustCapital offers today. And just to put the size of the crypto asset class today into perspective, the total crypto market cap is around $2.2 trillion. Regarding IRA assets in the United States to be managed, that's around $13 trillion. So when comparing IRA assets, the United States at $13 trillion, the entire crypto asset class, Bitcoin, Ether, and everything else is around 15 to 20% of that value. So even considering the crypto asset class in the future to break into a new all-time high price, surpassing $3 trillion to $5 trillion or $10 trillion plus, even that would still be well below the tokenization estimates by BCG, and it's also less than 10% of both the global equities market and 10% of the global bonds market, which are both over 100 trillion today. We've talked about the global derivatives market, real estate market, bonds, equities, etc. They're really large markets, and the crypto asset class is significantly smaller than all of these. And there are a variety of market projections for the crypto custody market to be $10 trillion by 2030, and also the stablecoin prediction by 2028 for the stablecoin market to exceed $3 trillion in market cap, which is basically the all-time high of the entire crypto asset class. So if stablecoins get regulated, there are billions or maybe trillions of dollars in the future that are interoperable. This also brings necessary liquidity. And from a regulatory front, there's a lot of excitement regarding MiCA, which is Markets and Crypto Assets Regulation, a framework in the European Union for all 27 EU states for crypto assets. So legal frameworks for crypto assets, for collateralization, for stablecoins are being implemented today. So looking at the Bitcoin price chart on the monthly time frame, we can see the last 3 cycles doing major moves and all-time highs. The first, large monthly candle, so we have 1 cycle, 2 cycle, and 3 bullish cycles. And these market cycles for Bitcoin and the entire crypto asset class are often referred to as the 4-year cycles, whether they're shorter or longer. So whether you believe it is the Bitcoin halving actually driving demand, these purple circles, whether you believe it's based off of elections and stimulus or just global liquidity as a whole, we've historically seen multiple cycles. In measuring the length of the 2013 Bitcoin cycle top until we got that first major move on a monthly time frame, so that's approximately 1,277 days, which is a while. In taking a look at the monthly RSI with these cycle tops, we can see basically the peak of the RSI aligns with the cycle top in 2013. Same thing with 2017, the peak of the monthly RSI. What's different is the peak of the monthly RSI here was around this first high on the March 2021 monthly candle. And as we scroll over for the all-time high price of Bitcoin, where we created one more high, this actually didn't align with the peak of the monthly RSI. This was bearish divergence. But that candle or wick is around November 1st. So what we're going to do is compare the length and clone this length to both March 1st and November 1st. So let's clone this, and then we're just going to basically apply this to March 1st. There, and then we'll clone it one more time and apply it to November. Right around there. So we're just speculating here if Bitcoin were to have a similar cycle length since the 2013 high up until the 2017 bull run. Measuring from that March high and applying a similar length, that would basically take us to September 1st of this year. And if we measured from the all-time high price for a similar length, that would take us to May of 2025. Now this is just an example using the longest cycle. If we use this cycle or this cycle, we're basically already at that level today, and we need to see that first major move. So if we measured from the 2017 Bitcoin cycle top until we got that first major move for Bitcoin on the monthly time frame, that is 1,096 days. We clone that and apply it to that March 1st candle right there. We're basically already past that level today, so we should get moving. And if we clone it again and have a more conservative look using the all-time high price around that November 1st candle, that would take us to November. So there are plenty of arguments we've shared in previous videos to show that the market cycles are still fully intact and they look good provided Bitcoin stays above the 8-month EMA, this orange moving average. We can see during the past cycles, maintaining above this level, specifically after the Bitcoin halving as we get closer to elections. In 2013, once we got to our cycle top, we blasted right through. In 2017, we poked into an all-time high and crashed and didn't get that first major move for 2 months. In 2020, we did it in about 2 weeks, and here, we're just over 3 months, so we are drawing longer, but the structure is still intact. And the same thing can be shown in the total market cap charts, even Bitcoin dominance. So, historically, when Bitcoin dominance crashes, this has led to the historical alt season where alts do those huge rises. In 2017, the Bitcoin dominance price chart absolutely crashed as Bitcoin went on a run creating higher highs. So Bitcoin went up, Bitcoin dominance crashed, and this leads to the historical alt season where they go parabolic. The same thing occurred in Q1 of 2021. Bitcoin dominance found its top up here. It crashed as Bitcoin was creating higher highs and alts rose again. And when Bitcoin dominance climbs up or stays the same and Bitcoin pulls back, alts unfortunately get hit harder, but the structure for the next alt season is still there. So historically, if these market cycles are to repeat as they have for the last 3 times over the past 10 plus years, Bitcoin dominance needs to find its top and do that crash as Bitcoin goes on a major run. And one thing I find really interesting for the Bitcoin price chart, the largest asset, is when it draws its first major move on the monthly time frame, taking out the previous cycle top for the last 3 cycles. It is up here for a range of 200 to 300 days, so 6 to 12 months. So this would be absolutely amazing to see play out again for Bitcoin to draw major moves in all-time highs and be at these highs for 6 to 12 months like the previous cycles. Another large bull run might be just enough to get rid of our bear market PTSD, and this would be amazing for the altcoin market specifically. So remember, this is not financial advice, and this is no guarantee that the market cycles repeat, but I'm sharing my thoughts for me personally on why I have exposure in the crypto asset class. So we've gone over some of this information before. If I talked about all of this, this would be like a 2-hour video. I've never seen us come back to the trend line after already reaching an all-time high price. We've gone over the Pi cycle top indicator. We've gone over the Bitcoin bull run index using 9 different metrics. So I just wanted to share whether we see Bitcoin draw its first major move in all-time highs in July or later. This is a huge reason why I have exposure in the crypto asset class because I'm playing it like the next alt season is still coming. And we have the November elections less than 130 days away. So basically, if these cycles repeat, we get another large bullish cycle for Bitcoin in the altcoin market, whether that's Bitcoin at 100K, 150K, or 300K like Rouse liquidity projection. And I shared in a previous video that Bitcoin would have to surpass around $240,000, 240K, to break the diminishing returns that we've seen each cycle. Alright guys, so I hope you found that interesting, and this is all noise until Bitcoin breaks out of that 100-day range that we went over a few videos ago. So that was a mini argument on why I have exposure in the crypto asset class and why I've had a Roth IRA with iTrustCapital for just over 4 years. Last month's video, we shared some clips of the CEO of iTrustCapital, Kevin Maloney, sharing some interesting stats such as iTrustCapital has done close to $10 billion in transactions and custody around $3 billion in assets. So I've been a loyal supporter of iTrustCapital for years, and I'm really happy that I moved a crypto Roth IRA that I had with another provider to them back in 2020. So I'm sure the majority of you are already familiar with iTrustCapital. If you'd like to learn more, this is linked in the top of the YouTube video description, right in the pinned comment, and at the top of my link tree. And for me, having a Roth IRA in the crypto asset class, which is a retirement account that grows 100% tax-free, really helps me keep perspective and keep that long-term vision. We've gone over this platform before. There are no monthly fees, hidden management fees, etc. There is just a 1% transaction fee if you trade. So for my holdings, I haven't made any big swings recently. I'm just twiddling my thumbs, so it's completely free. So if you're interested in a crypto retirement account, you can start with as little as $1,000, and using the link below and funding your account, you get a $100 funding reward. So retirement accounts might not be a fit for everybody, but it was a huge fit for me because I had a Roth IRA in the S&P 500 that I wanted to roll over into the crypto asset class. And I have family and friends that have IRAs with iTrustCapital today, and another one that left their job and rolled over their 401k. And for example, the cool thing about a Roth IRA is you can have multiple. If you still want to play the bulk of your portfolio, being conservative in the S&P 500 you can, and you can also have a separate Roth IRA just in the crypto asset class. And that really depends on each person's risk appetite, time horizon, etc. I know that the CEO of iTrustCapital said he's seeing for the bulk of clients, they're investing around 5 to 20% of their portfolio. And we know crypto's volatile, so the cool thing is, if you don't want any exposure to crypto, you can sell right to the US dollar at any time. So during bear markets, if you don't want to deal with any anxiety, you can sell right to the US dollar and decide when to re-enter or start re-entering when the market trend becomes bullish. Okay, so now let's quickly run through the several types of retirement accounts that iTrustCapital offers today. We'll go through a traditional IRA, a Roth IRA, a 401k, a TSP, a SEP IRA or SEP, a 403b, and a 457. So first up, we have a traditional IRA. This allows individuals to invest in assets using pre-tax dollars. Contributions may be tax deductible in the year they're made, so that potentially lowers taxable income, and the investment grows tax deferred until withdrawals are made during retirement. And the minimum distributions are required once you turn 73 and withdrawals are taxed as ordinary income, so it is growing entirely tax deferred up until then. So when you see traditional IRA, just think investing pre-tax dollars. Next up, what I have, a Roth IRA. Investing using after-tax dollars. So the contributions are made with after-tax dollars, but the good thing about this is the withdrawals, including all the earnings, all of the growth, are 100% tax-free in retirement. So for me, not financial advice, but I'm always thinking about the moon scenario in the crypto asset class, and for me personally, starting a Roth IRA earlier, I think I'm better off if that moon scenario comes to pass because I would be paying 0% in taxes. However, there are income limits for contributions, so eligibility to contribute is actually phased out at higher income levels, so that's why in a previous video we discussed a backdoor Roth IRA. For those that start contributing to a traditional IRA after contributing, they actually convert this traditional IRA into a Roth IRA. And all contributions can be withdrawn penalty-free, just not the earnings. And choosing between a traditional IRA versus a Roth IRA depends on a bunch of things and considerations: current tax bracket, expected future bracket, retirement goals, etc. So each person can consult with a financial advisor to see what would best fit them. And also just being aware of the early withdrawal penalties for a traditional IRA and a Roth IRA made before the age of 59 and a half, typically a 10% penalty. Plus any applicable income tax on the withdrawn amount, but keep in mind that you can actually withdraw completely penalty-free your contributions made to a Roth IRA. A Roth IRA also has some exceptions that could apply, such as disability or a first-time home purchase. So there is some flexibility there. Next up, we have a 401k and also a 401k rollover. So a 401k rollover would be rolling over funds from a 401k retirement plan that's offered by an employer into an IRA, whether that's a traditional or a Roth. And a standard 401k is a retirement savings plan that allows employees to save and invest a portion of their pre-tax income in a tax-advantaged account. So contributions are made with pre-tax dollars, meaning the amount contributed can reduce your taxable income during the year of contribution. And this can grow tax deferred, so you're not paying taxes on the capital gains as long as they remain in your account. And by staying in your account and not paying taxes right away, making them deferred, this allows your investments to compound over time without being reduced by annual taxes, even though you're paying taxes later on. Unless you did a Roth 401k, so you're contributing with after-tax dollars, and then you're actually withdrawing in retirement 100% tax-free. Next up, we have a SEP IRA or SEP. This stands for Simplified Employee Pension. This is a type of retirement account for small business owners and self-employed individuals to contribute tax-deductible funds on behalf of themselves and eligible employees. So this is usually established by the employer, and contributions are made directly to the employee's SEP IRA. And one benefit is the contribution limit for a SEP IRA is higher than a traditional and a Roth IRA, and contributions are also tax deductible. So in some cases, this can help a small business owner or employer reduce their tax liability. But we can see grows tax deferred until retirement when distributions are taxed as income. So like a traditional IRA, growing tax deferred, having that compounding potential. And what's better, a Roth IRA or a traditional IRA? There are pros and cons to both. It depends on a bunch of factors like age, market performance, tax bracket, etc. The one that's better is the one that yields you the highest number of profit with the least amount of tax liability. And it's hard to say because a traditional IRA could do really well being tax deferred. It is just growing and compounding, whereas a Roth IRA, although you're paying 0% taxes after, you're still being taxed initially, so you're starting out with a smaller amount. So it really depends on market performance. It's always interesting looking at different examples of a traditional IRA and a Roth IRA starting with the same amount and seeing which one performed better, and just seeing the amount of taxes you're paying with a traditional IRA if it's a large sum of money. So it really depends on your goals. So regarding taxes, for a Roth IRA, you're getting punched in the face first, and for a traditional IRA, as that grows, you're getting punched in the face after. Okay, I think we have 3 more left. So we have the Thrift Savings Plan. This is a TSP. So for those that are covered by the Federal Employees Retirement System, FERS. We have a 403B retirement plan, a type of tax-deferred retirement savings plan available to employees of public schools, certain exempt organizations, and ministers. And last but not least, a 457 retirement plan, a type of tax-advantaged retirement savings account offered to employees of governments and tax-exempt organizations. So setting aside pre-tax dollars, reducing their income taxes for that year of the contribution, and deferring taxes until the money is withdrawn after retirement. Alright guys, so we went through a bunch today, starting off with the crypto market cycles, diving into iTrustCapital, and I believe we went through 7 different types of retirement accounts that iTrustCapital offers today. And friendly reminder that iTrustCapital is linked right in the top of this YouTube video description. I hope you guys got some value out of this video. I always want to include real information, real stats, but of course I sprinkle my opinion here and there. So as always, I appreciate everybody that hits the like button. Thank you so much for watching, and I will catch you in the next one. If you enjoyed this video, I'd greatly appreciate if you could hit the like button, let me know your thoughts down below, and my link tree is linked in the top of this YouTube video description, with all links, crypto resources, and discounts. I'll catch you in the next one.